Good afternoon. My weekly article was titled The Feedback Loop Phenomenon. The previous Monday I'd written the most important currency to watch right now is the US dollar versus the Chinese renminbi. And I was writing on the Sunday and I said it could slice through 7 like a hot knife through butter. The offshore renminbi market popped through 7 that Monday, sending a shiver through global markets. The markets emit signals, and the signal the market was emitting was that there was a precise correlation coefficient between a weaker Yuan, or renminbi, and a weaker S&P 500. And on Friday, the offshore market closed at 70985. On Thursday, China set its yuan fixing weaker than 7 for the first time since 2008. President Trump finally pulled the trigger on citing China as a currency manipulator. Tony Fratto tweeted, "We're in that bizarro world where you can be a currency manipulator if you fail to manipulate your currency." It is clear that the Chinese have been keeping the renminbi artificially high. George Magnus, writing in Bloomberg's Quint, China allowing the yuan to slide below 7 to the dollar is a watershed moment for currency markets that's symbolically equivalent to the US and other countries abandoning the gold standard in the interwar period, or the collapse of the post-war Bretton Woods system of fixed exchange rates 4 decades ago. The implications for the global economy, he said, are equally significant. The world's major currencies aren't tethered in the way they were in those periods. Gold and Bretton Woods both served as anchors for the world's monetary system, and their demise reflected the economic and political disarray of their times. Today, the renminbi is semi-pegged to the dollar. The arrangement serves as an anchor for China's financial system, now the world's largest by assets, for many currency systems in Asia and around the world, and for US-China economic and financial relations. If that mainstay ruptures, it's liable to set off chain reactions inside and outside China. That's why the loosening in currency policy by the People's Bank of China this week, while it may seem unremarkable for most people, is an important development. Late last year, the view was, "This is all on Xi's shoulders," said Trey McCarver, co-founder of Beijing-based research firm Trivium China. Xi has personally said he would handle relations with the United States, and at this point he has failed. Those relations are spiraling out of control. What is clear is that Xi Jinping has repelled the US advance, and this past week's renminbi price action was a message delivered with finesse and subtlety, and whose import cannot be ignored. Given that neither President Trump nor Xi Jinping have, it seems, any desire to back up, the risks are skewed as follows. We should expect more volatility in the feedback loop that was characterized by Bloomberg Businessweek thus: the chaos cycle, Powell speaks, Trump tweets, China reacts, markets freak. The point is this: the yuan is now the catalyst, and China has signaled it will be a shock absorber. Xi Jinping was also signaling he had control of the console. The direction of travel for the Chinese currency is therefore lower. The yen and the Swiss franc, considered safe havens in troubled times, have been in demand, and sterling was described as drinking at the last chance saloon, and closed on Friday with its nose just in front of 120. Gold, safe haven, crossed $1,500 for the first time since April 2013. G7 sovereign bonds tilted further and deeper into negative territory. So this bid for safe haven assets has intensified, and a weaker renminbi will only intensify this impulse as it courses through the veins of the foreign exchange markets. China has exerted the power of pull over a vast swathe of the world over the last 2 decades. We can call it the China, Asia, emerging markets and frontier markets feedback loop. This feedback loop has largely been a positive one for the last 2 decades. With the renminbi now in retreat, and in a precise response to Trump, this will surely exert serious downside pressure on those countries in the feedback loop. To wit, emerging market stocks closed down for 11 days running, 12 being an all-time record, which was narrowly missed. The purest proxy for the China, Asia, EM and frontier markets feedback loop phenomenon is the South African Rand, aka the ZAR. The Rand was down 0.4% at 15.1121, its weakest level on a closing basis since September 2018. The Rand is also the most volatile currency in the world, with the 1-week implied volatility climbing a 4th day. And I concluded by saying the Rand is at risk of a further asymmetric downside move. Thank you for listening. It's appreciated.